Your Lending Era, the podcast where we dive into the world of residential, business and commercial finance, bringing you expert insight, tips and strategies to help you navigate the intricate landscape of lending in Australia. I'm one of your hosts, Jessica, and in today's episode, we will be deep diving into the first home buyer space. Quick disclaimer though, this will be spread over 2 episodes, so you will have to tune in next week to get the back end of it. Here with me today, we have Trilogy Funding's David and Hope.
Hi, Jess.
Hey, Jess. How are
Hey,
you?
guys. Oh, phenomenal. Never been better.
Ready for another week.
Ready for another week. So, guys, the first home buyer space, we've all been there, we've all done it. David a few times more than myself and Hope. But let's just go back to that first home buying experience. How did it go?
So, look, for me, I'll just start with me. So, for me, it was quite a while ago. I bought my first home 2002, right? So 20 odd years ago when I was 25 years old. And like, most first home buyers at the time, we bought a, 3-bed ex-govie in Western Creek and then got into kind of renovating and move on. As far as kind of the lending goes, I remember I didn't shop around at all. I literally walked into a bank where I knew someone who worked, got a loan, and that was it. And I didn't shop around. I didn't question interest rate. I didn't question lender's mortgage insurance. I didn't question the math and numbers of how it all came together. And then I just kind of winged it the whole way through. And I felt nervous the whole way through because I felt that there was no one steering the ship. And for that reason, I've spent the last 20 years in this career just trying to put it together a little bit better for first home buyers based off what I learnt back then.
Regarding the shopping around, that probably wasn't even a thing back then.
Well, no, you got to remember this is kind of 5 years before anyone had an iPhone, right? So it was quite a long time ago. And, short of having a quick look on what lenders may have listed on their websites, you've got to remember that's before Wi-Fi, so it's dial up, log in and have a look to see what they've got, or just literally pound the pavement and go and ask some questions. That was about the way to do it because mortgage brokers really weren't that strong back in the early 2000s. I don't know the exact market share, but it would have been less than 15 or 20%.
Wow.
So, yeah.
And I think when you look back at a time like that as well, there was none of this best interest duty in mind.
No.
So if you were happy to sign the dotted line, the bank was all too happy just to accept that.
Yeah, absolutely.
Is that when they used to fax away the applications?
Yes.
Yeah.
Everything was done handwritten and fax.
Compared to the 500 pages of documentation that we have to maintain these days.
And the pay slip that I provided was a pay slip. It came in an envelope.
Like handwritten?
Yeah. Oh, no, not handwritten.
Oh, right.
Yeah.
We're a few years past that.
In my mind, it's just so old school.
It's crazy. Well, off the back of David, my first home buying experience was in 2018 it would have been. So we're 16 years ahead of the curve for Dave there. And I was 23 at the time, so I was pretty young and dumb. But I had been working at Trilogy at that point for a few months, still on probation, and I just kind of spoke to the guys around me and thought, is this possible? Luckily for me, it was. I got my fully assessed pre-approval all under my belt before I really started shopping, which was the key for me because I'm such a planner. I can't pull the trigger unless I know everything's fine. And off the back of that, we had our pre-approval in hand. We went to a few open homes. Within 3 or 4 weeks, we found what we thought was the one. Of course, it was completely over budget and all of those things. But we managed to kind of get it within our budget, within reason. We used Nicole Brophy, who's one of our colleagues at Trilogy back then, and she was just absolutely brilliant. For someone who had not a whole heap of context, myself and my partner, essentially none, there was no question that was too silly to ask Nicole. She handled it like a pro.
Because as a first home buyer, you don't know what you don't know.
No, you don't.
No.
And there's 100 different little bits of information. You don't know which bits are important or not. So you need someone to hold your hand.
And that's the thing. They don't teach you this at school.
No, they don't.
I don't know about you, but my parents definitely didn't sit me down and have the talk of how to buy your first home when I was a teenager.
My dad did, but it was completely unrealistic. He's like, you need a 50% deposit. And I'm like, mate, you bought your house for $60,000 in 1987. What are you talking about?
Unrealistic.
Yeah, completely.
Okay, and I know, Hope, your first home buying experience, which we'll touch on a little later as well,
Yep.
it wasn't as smooth as my experience and a little bit worse off than David's even.
Yeah, look, I didn't have the best experience. And as Jess said, we will go into it further later so I can explain exactly what happened. But essentially, I did have a pre-approval in place that I renewed once. I think I had it renewed once. And then had sort of been looking for 9 months and just didn't find anything suitable. So figured that I wouldn't really need to roll over my pre-approval again. Anyway, ended up buying a property under auction conditions without a valid pre-approval. And basically that was just the tipping point of everything else going wrong for me, finance-wise, from that point. I ended up buying that property. This was several years ago. I bought that property for $532 and did end up selling it 3.5 years later for $805. So I happy ever after. But initially, I just don't think I was in the right hands and I didn't have the best experience. And I think that really taught me as a broker now how important it is to hold first home buyers' hands.
Oh, absolutely.
Because they don't know, as Dave said, they don't know what they don't know. And I didn't know anything. So it went really pear-shaped for me.
And even if you have a conversation with friends or family who've done something, if it's anything more than 2 years ago, it's essentially irrelevant.
Yeah.
Their experience won't be anything. You know, stamp duty waivers change first homeowners grants. We don't really see those things anymore.
No.
But, you know, your friend may have had that in 2018.
Correct.
Okay, well, on that topic then, let's get into a little bit about how to qualify as a first home buyer and what that means. So within Australia, at what point in your life can you actually start to accrue property?
So you need to be 18 years of age. You need to be an Australian citizen or New Zealand permanent resident. So I myself am a Kiwi. I don't have a visa. It's called the Trans-Tasman Agreement, which is basically a handshake between the two governments. So that's great. If you are a temporary resident, you do need FIRB approval, which is the Foreign Investment Review Board.
Yep.
And if you are buying, if you have partnered with someone in Australia and if they are a citizen, then you don't need that approval. But obviously, you'll just need to chat through that with your broker or your lender.
So essentially, as long as you're over the age of 18, obviously earning an income in Australia, paying taxes, you can purchase a property. And the visas, there are requirements that are allowing it, but it's best to speak to someone who has the ability to tap it into a search engine to see if you're eligible.
Correct, because not every visa number is acceptable by the lender. It will depend on which one it is.
Okay, and I think there'd be more that aren't accepted than are.
Yeah, I think I won't go into detail to bore everyone, but on my list there's 4 that are acceptable.
Oh my goodness. How generous of the Australian government.
Very.
Yeah, beautiful. Okay, well, say I'm a 19-year-old, let's be generous. I'm a bit older than 18. I'm a permanent resident. I want to buy my first property. Is there any restriction to the property that I can buy, or can I just go on All Homes and buy whatever I want?
You actually need to be a little bit careful with what you go and commit to as far as that new purchase goes. So the number one that I come up across is smaller than 50 square metres. Okay, so a lot of people looking to get just their foot in the door with a small 1-bedroom apartment will potentially bring me a property that is smaller than 50 square metres. And with lenders' mortgage insurance, some lenders have an issue with that. So that's probably the number one that I would probably say just really be careful of and double check. The other one is anything that has a kind of a dual income or dual living type aspect to it. So I see, first home buyers, sometimes they think, it'd be great. There's 2 1-bedroom apartments that are linked to each other with a common door.
Yep.
I'll rent out half and keep the other half. Those kind of dual key arrangements, they can sometimes be tricky with lenders, so we need to be careful about those. And the other one is those that want to, get on, buy a block of land and build. The trying to go down the path of either owner builder or a kit home is sometimes very problematic with lenders for first home buyers. And it's funny enough, I see first home buyers bring me those 3 combinations
all the time.
All the time.
Regularly.
Yeah. I was going to say, even only a few months ago, David and I had a couple who were wanting to put a tiny home on a block of land.
Yeah,
And
I think that's like a trend.
Yeah.
Like the tiny homes are
It
like
definitely
cool.
is. But the lenders haven't really caught up.
No. We're much better to stick with a normal residential apartment over 50 square metres, or a townhouse or a house. If that's your first home, then you're on the right track.
Yeah, beautiful. Okay. And if I am buying that first property, what kind of value do I need to put into that property? Because we've all heard, you only need 5%, you only need 5%, but I don't think that's realistic.
So depending on which lender you go to, yes, there are some non-conforming lenders that are still accepting only a 5% deposit. But if you want to stay mainstream, you need about 7.5% to 8%, assuming that stamp duty is not applicable. So just to put an example forward, if we were doing a purchase of $700,000, you would need about $56,000 for your deposit, and then a little buffer there on top for costs as well.
Yeah, like your legal fees and transfer fees and all those
Correct.
things, which do add up pretty quickly.
They do,
yeah. Okay, beautiful. So definitely the 5% is applicable in some scenarios, not really recommended in most scenarios, unless obviously it's a scheme that we'll talk about later on.
Correct.
Absolutely. Okay, and let's talk a little bit about the affordability aspect, because I know that we have a lot of clients who haven't dipped into this before and they want to kind of buy an $800,000 property straight off the bat, and potentially they only have incomes of $100,000. How does that look?
So look, to summarise this, what a bank is looking for is your capacity to repay the loan, and how they're going to come about those numbers is they're going to look for what is your net income, what are your net expenses, and that might be living expenses, but it also might be other commitments, car loans, credit cards, that kind of thing. Because what they're looking for is what is your net monthly surplus? How much can you put towards this new property? And they're also looking for to do their calculations also on a buffered rate. Okay, so if you've got a $2,000 a month surplus, they're not going to be able to lend you a home loan that has $2,000 a month repayments, because they need to have a little bit of wiggle room in there. So that's how that kind of comes together. If you're looking for a very rough band, something to take away from this chat, I would probably say somewhere between a 4 and a 5 times debt to income ratio would be reasonable for a first home buyer. So add up your household income, times that out by 4 to 5, and then that gives you a band of which a lender would think that you're going to be comfortable lending.
Okay. And in terms of, you mentioned those other commitments and things, so that would include like your car lease, salary packaging and all of those things?
Because they're expensive.
They are expensive. But definitely the biggest killer in those is definitely car loans and package salary leases. Because you remember your package salary lease, your fuel and everything else that goes with it is clearly evident as to what these things cost, and clearly listed on your payslip.
Exactly.
So it's a and they're usually for a reasonably large figure compared to the purchase price of the vehicle. And that really does hamper some servicing calculations. So you just got to be really careful.
I can imagine. And okay, here's one that we get asked a lot: HEX debt. It's taken out pre-tax. Does the bank care?
Yes, absolutely they care, right? And you may even, you may only, get in touch with your tax debt or your HEX debt when it comes to do tax time. But what a lender will do is they'll, have a look at your income. They'll have a look at the scale of payments of what you have to pay per annum. They'll work that out on a monthly basis, and they'll put that in that servicing calculation.
Okay, so even if it's not something that you physically see or pay, still completely?
It literally looks like a personal loan.
Okay.
Yeah, that's how they would look at it.
Yeah, correct.
Yeah, beautiful. Okay. Well, one thing I know, particularly around my friend group, hope yours is probably a bit similar, is some people don't think that they need a pre-approval. Is it essential to have one? Is it just recommended?
I think if you're starting to get serious about being active in the market, if you're scrolling all homes, if you're on Zango, if you're on realestate.com, and if you're really motivated to buy, I think that's probably the perfect time to start getting your pre-approval organised. And the main reason for that, and this is the conversation I have with my first home buyers all the time, is that if you do come across a property that you love, you don't have to scramble and try and get finance and things organised, because all of the agents will ask, have you been pre-approved? Have you got finance organised? Have you spoken to a broker? And especially if you are really serious about moving forward with that property and placing an offer, the agent's going to take that feedback back to the seller and say, these guys are serious, they've made a really good offer, and they do have finance approved. So I think it's always best, if you are in a position to actually buy a home, to get that pre-approval done straight away.
And would I be correct in assuming that if, say, I'm a seller or I'm an agent, I have two clients offering the same amount of money for a property, the person with the pre-approval is getting that house every day?
Absolutely.
Of the week?
Which one are you going to choose? Like the one that's been organised and has, made that decision to get themselves in a strong position early, or are you going to give it to the other buyer that hasn't even started the process? That can take a couple of weeks. Like, it's really a no-brainer.
Absolutely. And if I were to get a pre-approval, how long would it last? I know you touched on earlier you had an expired pre-approval.
Yep. So again, depending on which lender you go to, some of them are valid for 3 months, some of them are valid for 6. Also depends on if there's lender's mortgage insurance within that pre-approval as well. And obviously, if your circumstances change at any point during the time that you have, the pre-approval has been granted to when it's due to expire, if anything's changed in that time, that can affect things as well.
And in that circumstances point, what falls under that banner? Is that kind of just, you've got a new job, or is there more to that?
Correct. So if you have moved house, if your employment has changed, if you've been on a holiday and spent most of your savings, it really, really depends. But anything like that, if your pre-approval is due to expire and you come back to your broker and want to extend it or roll it over, then we do need to declare those changes to the lender in order for them to make a decision on whether they're going to reissue you a new one or not.
Okay, so once you've got your pre-approval, try and keep it as tidy-whitey as you can.
Absolutely, yes.
Beautiful. Okay, another thing that I did want to touch on briefly is the two types of pre-approval. Now, David, I know that we have quite a few clients who fall into what I would say, as I've just said, like a tidy-whitey scenario, like mum and dad, 2 kids, dual income, no liabilities.
Yep.
But then we also have clients that fall into the spectrum of an 8% deposit, first home buyer. What type of these two pre-approvals are necessary, and what's the difference?
Look, I think we go with the pre-approval that's most appropriate for your set of circumstances. So if I've got, self-employed, or I've got someone who works, a large amount of commission income or a large amount of overtime income, someone who has, had a busy credit file because they're a business owner or something like that, absolutely 100% fully assessed pre-approval. Like, that's what you need to give that person confidence to go and sign an auction contract and a Section 17 and get things moving. However, if you're, a dual income family, both public servants, been in our job for the last 10 years, have made no financial changes in the most recent period of time, and also we have strong servicing and a hefty deposit, 20 to 30 to 40%, then a system generated pre-approval is fine. Let the bank's computer system run the credit file, look at the information that we've entered, and generate a system generated pre-approval. Usually, if you go through a broker, you'll have a system generated pre-approval within a day or two. But a fully assessed pre-approval, with some lenders and self-employed and complex self-employed, you may be waiting a week or 2 weeks. So I think whatever is the most appropriate for the client's circumstances is the way to go.
Okay, and the best way to identify that really is speaking to someone who knows about it.
Yeah, because everyone thinks that their situation's not complex until they actually have to explain it to someone else, and then they realise, oh, hang on, it is complex.
Yeah, lots of different moving parts.
Yeah.
And all of these kind of online pre-approvals, I say that very lightly, they aren't really, that's not necessarily indicative of the real world and what a bank would look at, is it?
No. Look, there was a bank that was advertising, 30-minute pre-approvals. It takes 30 minutes to scan someone's photo, driver's license and pay slips into the machine. Like, there's no way that's a fully assessed pre-approval. No. That may not be appropriate for everyone's circumstances.
One of the ones that I see or clients mention most often, I think, is the indicative approval in the Commonwealth Bank online banking system.
Yep.
And I think that's a very light nudge towards, we think maybe you can obtain finance, but that's definitely has not been verified in really any way. At least the system-generated pre-approvals that we do, we have run the math and numbers and normally obtained all supporting documentation as well. So the only real thing about the conditional system-generated approval is the credit check, because we don't do that.
Yeah. Okay. And generally when we say when we've verified the numbers, that would be kind of David and myself, Hope and Sophie, Nicole and Sophie, Paul and Carrie. Like it's two sets of eyes.
Correct.
Looking, it's dual verification. It's not just someone having a squizzy and saying, oh, it looks okay.
Looks all right.
That's right.
Beautiful. Okay. Well, on that, let's just circle back to your pre-approval scenario, Hope. Now that we know, kind of the restrictions to the property, the purchasing funds needed, that your financial position cannot change.
Yeah.
I think two of those three things definitely are where it went wrong for you.
Yeah, it did. And so sort of where it went wrong was been looking for a while, had renewed my pre-approval once. Then the rental property that I was in, the owner wanted to move back in.
Yep.
So that was great, as a lot of first home buyers do. They move in with family, so I thought that was a really good thing to do. So I had changed address, which going back to my pre-approval, obviously that was a pretty significant change of circumstances. I went from renting to boarding, and the lender does treat that differently. And then, sort of spent 5 months, I think it was, with family. Pre-approval had lapsed, then found a property that I wanted to purchase, which was, as I said earlier, going to auction. So essentially made an offer, it was accepted, and then I was expected, because it was an auction property, to sign the contract, sign the Section 17, which waives the cooling off period, and pay my deposit straight away, which is exactly what I did. So from there, I was sort of locked in. I had advised my financier that I had purchased a property, and then once it sort of the contract of sale and was sent through, the valuation was ordered, all of that fun stuff. Then the assessor went, "Oh, hold on, you've changed address."
Discrepancy.
Yeah. And also now you're boarding, you're not renting, and I didn't have genuine savings either at the time. So I was using my rental ledger to verify the genuine savings, which the assessor sort of come back and said, well, you've moved, you're boarding now, even though you're paying, the family. That doesn't count, and so you no longer have genuine savings. And that sort of was another massive issue at that time.
Yeah, spiralling.
It did. So as a first home buyer, staring down the barrel of losing a 10% deposit and potentially not being able to settle on my first home, that was extremely stressful, and obviously taught me a massive lesson when I go to buy property, but also advising my clients that it's really important to always have your pre-approval valid, to let me know if anything changes within your circumstances, and maybe if you are looking to change anything, run it by me first, and then I can let you know if it's a good idea or not.
Okay, one thing actually we haven't discussed that I think is valuable to people listening, that term genuine savings. What does that entail?
So essentially what genuine savings is the lender is looking for you to save over a period of time, and they want to see that money, essentially it's a 5% deposit for your new purchase. Yeah. They want to see that money in the account untouched or being contributed towards over a 3-month period. Okay. Obviously, if parents and things have gifted the money, then to verify genuine savings, we can provide a tenancy agreement and a rental ledger to show that the applicant has been paying monthly rent, and that's basically treated the same way.
Oh, okay, brilliant. So it really is just kind of some form of proof that you can manage money in one way or another.
Exactly, because if you're going to take on hundreds of thousands of dollars worth of debt and have a monthly mortgage commitment that you need to repay, the lender wants to see your ability to be able to do that, demonstrated through savings or by paying rent.
Okay, that seems reasonable. I can't rag on the banks for that. Okay, so in summary, essentially you can purchase a property in Australia at any point over the age of 18 subject to visa requirements. Ideally, you're looking at something that's just a residential property, nothing too crazy, no small apartments, no tiny homes.
No kid homes.
No kid homes,
no
all of those
builder.
things. Typically speaking, you would want to have at least an 8% deposit plus some cash for costs. And I know personally I wouldn't want to spend every dollar in my bank account and not be able to buy a bed. So that's something to factor in as well. As Dave mentioned, we want to keep our income and our debt levels between a 4 and 5 times ratio. So if you do want to see what you can purchase for and you earn $80,000, times that by 4 or times that by 5, and there's somewhat of an indicator. And then in terms of your pre-approval, not essential, highly recommended, something that many people can definitely throw their opinions towards, but our recommendation would always be have the pre-approval, yes?
Yes.
Valid.
Absolutely.
Valid.
And if anything happens, let your broker know.
Absolutely. Okay, well, I think that summarises it all. And thank you everyone for tuning in today and listening while we discuss this. As I said, this is part of a 2-part episode, so tune in next week and we're going to discuss 3 kind of alternate entryways outside of the typical 8% cash deposit.
Perfect.
Beautiful.
Thanks, Jess.
Thanks so much, Jess.
See you
Thanks,
next
guys.
week.
Bye. We acknowledge the traditional owners and custodians of the land this podcast is being recorded, the Ngunnawal people. We pay our respects to the elders of the Ngunnawal people, both past and present.